Welcome to the Silent Trading channel. Today, I'm going to be analyzing the gold chart on Thursday, the 22nd of January. But before I go on, please subscribe, like, comment, and share if you like this video to support me, to assist me in my trading journal. Right? I'm going to create content for you guys to watch, for you guys to learn. I'm going to give you information, I'm going to give you knowledge, and what I'm doing, what I'm trading based on my experience, based on my knowledge, based on the strategy I'm using. I'll be guiding you guys. So I will be safeguarding any of the knowledge I'm giving here. Right? I'm gonna be giving every single corner, every single nooks and cranny of the knowledge I'm giving you here. I'm not gonna be safeguarding any percentage of it. Right? So I'm doing this just so you guys can really learn something from what I'm doing. So you guys can really learn. So you guys can really get something out of it, out of watching my video, right? So today I'm gonna start analyzing on the 4-hour candle first. But please, before we go on the 4-hour candle, I'll take a look at the daily bias first, right? The daily candle shows us that price has pushed down once, right? The daily candle has pushed down once. What is this push down below for? We can see that if the daily candle has pushed down and wasn't trying to close as a red candle, right, and trying to pull back and push above, we can take this daily candle as a candle to clear off buyers. So this is a week. Buyers are clear over here, correct? Buyers are cleared off from the market, right? So this week, this below week over here is the week to pressure or force buyers into closing their position. All right, so buyers may close position at around here before touching the next support, because touching the next support means price will have to means the market will have to down further. Because why? Touching this support means buyers are coming into the market. Why is it so? It is so because buy or sell limits are normally placed by retail traders at support and resistance levels. So wherever there are support, buy limit will be placed by retail traders. Wherever there are resistance, sell limits will be placed by retail traders. Correct? But there are also some different groups of people who believe that when price push down to touch support, it will go down further. Those are the kind of people who play using breakout strategy, and instead of placing buy limits as support, instead of placing sell limits at resistance, they place buy stops, right? And they place sell stops. Because why? They believe in breaking out, they believe in price breaking out, so they place sell stop, buy stop, because if price is going to drop further, their sell stops over here is going to get triggered, correct? So when the sell stop get triggered and price drop down further, their orders is going to be taking profit, right? Their orders will be in floating profit. But that is not how the market is designed to do, because normally price manipulators knows the volumes between each position, whether buy or sells are more. I'll say that those smart money, those big money, they have a way of knowing whether in the chart right now there are accumulation of buyers or sellers more in the market, and they will trap buyers or sellers either if the price drop down to touch support and there are more buy stops than buy limits, price will trigger buy stops, right? No, not buy stop. Price will trigger sell stops, correct? So people will get their sell position over here, and then price start pulling back. This is if sell stops are over here. So when price push down, what you call this is called a liquidity sweep, right? A liquidity sweep is pushing down for sellers to get their position before pulling back. So sellers are trapped over here, right? Or price tries to break above, and their buyer stops at resistance. And when price tries to break above a little bit, and when buy stops are triggered, buy position are open over here, and then price start pulling back, which means buyers are a lot more than sellers at resistance. So we have a way of knowing whether buyers or sellers are in the market by using what? By using price action, one, by using support and resistance, two, by understanding human psychology, right? So I don't trade complex strategy. I don't trade complex theory. I trade using simple strategy by understanding basic price action, but not the kind of price action you're looking for, not the kind of price action that you're naming for each candle pattern. Nope, not that kind of price action. My price action is when the price or the chart is showing me something, and I know that this is a bullish price action, this is a bearish price action. That is how I know the chart is going up or going down. But not the kind of price action you're looking at by naming the pattern of candle. It is no. My price action is price needs to accomplish a certain criteria before it can go up, a certain criteria before it can go down, right? Price is always gonna expand, but when before it expands, it needs to accomplish a certain criteria or condition before it can expand either upwards or below, right? It can expand above, it can expand below. It depends on the price action. It depends on the criteria it is fulfilling, right? So my kind of price action is I look at the action between or in between each candle movement about what it is doing. Is it accumulating buyers? Is it accumulating sellers? Right? Is it trying to clear off buyers? Is it trying to clear off sellers? Right? By clearing off buyers, it is actually either pushing down, forcing buyers to close their position, or pushing down to sweep stop loss, right? Pushing down to trigger stop loss before reversing up again. Correct? So not all of the traders place stop loss, right? Not all traders place stop loss. Some traders, they open their position by hand, by market execution. So the market sometimes needs to pressure those sellers and buyers who trade by not using stop losses. So they need to pressure. So by pressuring means the price needs to drop down as hard as can be. The price needs to expand downwards as hard as can be before it can push back up, before it can reverse. Because the market needs to clear off the accumulation of buyers and sellers, or buy volumes and sell volume, before it can go up. If there are too many sell volumes, the price cannot drop down. The price cannot expand downward, right? The expansion can only happen. The expansion is gonna happen when the volumes of that side is a little to none, right? So which means if price is gonna push up, there has to be as little as possible buyers, right? If price is gonna drop down, there has to be as little as possible sellers in the market. That is how the market is going to push up or drop down, right? Or either I'll call it expand downwards or expand upward, correct? So there are always reasons for the market to move, because we need to understand that the market is moving based on what? Based on not indicators, not strategy. The market is moving based on volumes, right? And the market is moving either based on volumes from retail traders or moving based on volumes from big money, which means if retail traders, if the accumulation of buy volumes from retail traders are still not much enough for the big money to move, they're not going to move. They're going to let you take little profit, little win from the market as far as possible until there are a big accumulation of buyers or sellers in the market, and then the big money will start moving. But the problem is, most of you think that the big money are looking to hunt for your orders. Most of you think that the big money are looking out to hunt for your orders, but actually it isn't. The big money isn't out to hunt you down, but the big money works based on what? Based on the system, based on the ecosystem of the market, the ecosystem of the chart. They are not looking to hunt you down. They are not looking to take your orders. No, they are not purposely looking to take your orders, but this is how they work, right? They work by analyzing the chart. They work by analyzing fundamental news, right? They work by analyzing statistics. They work by analyzing spreadsheets, right? Everything they're doing, they are not looking out to hunt you down, but they are analyzing based on every information there is in the market, every information there is in the world about gold or about the instrument you are trading. They are all analyzing based on all the kinds of information, not looking to hunt you down. But the problem is, you guys do not understand the market well enough, so you can't be profitable consistently. That is your problem. The problem is the market isn't looking out to hunt you down, but they are working based on how the system works, right? The system works by what? The strong always preys on the weak, correct? So if you understand the chart well enough, you're not gonna be walking with the weak. You're not gonna be moving with the weak ones. You're gonna be waiting for the strong one to start moving, and you start following the strong one. That is how we're gonna move in the market, right? And this is what I'm guiding you guys into. And stay tuned. Always stay tuned to my videos. If you're watching, I guarantee you, you will get something out of my video. You will get something out of my analysis, right? But if you're missing out on this, I'm sorry. I'm not gonna come back to analyze. I'm not gonna come back to analyze. I'm not gonna repeat myself. I'm gonna just give you what I'm giving you, and after I'm done with it, I'm off. I'm gone. Okay. So right now we can see that the price action is still on the bullish side because the daily candle has started pulling back, and the 4-hour candle has started reversing. And as you can see, the 4-hour candle has started reversing, but it isn't a complete one yet because resistance are not broken yet, right? We wait for the resistance to be broken and we start believing that the market is reversing. But right now, even though the market isn't a complete reversal yet over here, if the price expand downwards but not touching this support over here, not triggering buy limits over here, this week will be where I'm buying, right? This is where I'm placing my buy limits because I wait for the market to show me something before I buy. All right, so this is where I'm buying. Okay, or I can buy even before it reaches this point in the chart. I'm gonna be buying maybe even before it reaches this point in the chart because sometimes markets doesn't push price all the way to the place it was supposed to go to. So we will either be buying before, right, or either buy at the spot we're buying. So I'll place my buy limit over here. If the price push down, not touching this buy limit over here, I'll enter a position by market execution. That is how I'm gonna wait to buy because I believe that this reversal could be the strong one. So I'm gonna buy if the market push down enough, or you'll call it a what? You're gonna call it a retracement, alright? A retracement over here is where I'm gonna buy. So for today, this is all I'm gonna be telling you. So please be safe in trading and stay tuned to my video tomorrow and every day after tomorrow because I'm gonna be coming here often or maybe every day to help you guys, to guide you guys in trading. So stay tuned for tomorrow. So for today, that's all I'm gonna say. See ya.